Hello everyone and a very good morning to you. This is Rachel live from 𝐊𝐴𝐴 Studios and you're watching The Opening Bell, a show where we bring you how the Australian share market performance will open the trading session and the associated market drivers. Let's first take a glimpse at the market chart during the early trade on the first day of the week. The Australian share market opened higher this morning as Wall Street indices registered record closing highs. An uptick in oil prices is expected to support energy stocks in today's session. Looking at the market open trades, miners are leading the pack. BHP Group, Whitehaven Coal and Iluka Resources, their shares advanced during the early trade. Pilbara Minerals and Orocobre shares also inched up. Rio Tinto and Fortescue Metal shares also climbed up the ASX ladder so far this morning. Healthcare, IT and financial sectors are also pulling the cords on the ASX 200. On the other hand, IT stocks Altium and Megaport extended their losses. Then Crown Resorts, Corporate Travel and Eagers Automotive, their shares also slid lower. Now, before we jump to the ASX charter for today in detail, let us first look at Friday's US market performance. On Friday, the US Treasury yields extended their rally while the three major US stock indices rallied to record closing highs as investors relaxed a bit from worrying of decelerating pace of economic recovery from the coronavirus pandemic that dominated trading activity for much of last week. On Wall Street, stocks gained upside momentum as financials and other economically focused sectors recovered from this sell-off, triggered by growth worries earlier in the week. The Dow Jones gained 1.3%, while the broader market index, the S&P 500, was up 1.13%. The tech-focused Nasdaq Composite rose 0.98%. Moving on to the US Treasury yield scenario, concerns about a slowing pace of economic recovery had reduced investors' risk appetite early in the last week and prompted a bond buying spree. This action had taken 10-year US government bond yields to a 4.5-month low on Thursday. Now, according to data released on Friday, investors were aggressively cutting down their short bond positions through to the 6th of July, which also weighed on yields. The yield on 10-year Treasury notes ticked up 7.7 basis points to 1.365% on Friday. Moving on now to the currency space, the US dollar and Japanese yen eased on Friday as investors favoured riskier currencies. That's as the rally in US Treasuries seems to be running out of steam, with global stock markets showing strong momentum. As a result, the dollar index fell 0.252% to 92.131. On Friday, the Australian New Zealand dollars slid to lower levels as risk aversion swept through global equity markets, while Sydney tightened its COVID-19 lockdown as the surge of the Delta variant threatened to go out of control. The Australian dollar fell to 74.12 US cents on Friday, having shed 1.5% for the week. It touched a 7-month low on Friday of 74.1 US cents after penetrating the major support level of 74.45 US cents, opening the way for further decline. Overall, investors are looking to US companies' upcoming quarterly results and forecasts around the recovery in the second half of 2021, as some worry that the recent economic surge is already waning. A massive jump in second quarter earnings is expected to mark a peak for US earnings growth and the recovery from last year's pandemic-induced profit collapse. Starting on Tuesday, earnings reports are due from JP Morgan Chase, Goldman Sachs, the Bank of America and other big banks, kicking off the quarterly results season. They could give early clues on the economy and stocks tied to growth. Most big US banks are expected to report a big rebound on quarterly profits, even with trading income falling and revenue stalling on low interest rates and weak demand. Investors are also eager to assess whether earnings will support Wall Street's run higher, with the S&P 500 up roughly 16% for the year so far. Many market watchers say the expected surge in earnings this year is a big reason for the market's strong performance. Now it's time for a very short break, but stay tuned. I'll be back with more updates on the Australian share market.
Tune in to get the latest information.
Whether it's about market movements or the currency graph,
Sectoral coverage or industry news.
we cover it all on our news segments.
Be on top of the latest news
With 𝐊𝐚𝐥𝐤𝐢𝐧𝐞 TV.
A very warm welcome back. This is Rachel, your host, live from 𝐊𝐚𝐥𝐤𝐢𝐧𝐞 Studios, and you're watching The Opening Bell. Now that we've taken a glimpse of the US market performance, let us look at major newsmakers in the Australian share market so far today. Chalice Mining shares are currently trading in the green zone, announcing its intentions to pursue a demerger of Australian gold assets. This follows a strategic review which concluded it would provide the optimal structure to maximise value for its shareholders. The demerger would aim to deliver Chalice shareholders a standalone listed Australian gold-focused exploration company focusing on discoveries in Victoria and Western Australia. The potential transaction structure will be finalised subject to receiving legal, financial and taxation advice and communication with regulatory authorities. Next up, Wesfarmers remain under the spotlight today on launching a takeover bid for Australian pharmaceutical industries. API received an unsolicited, non-binding conditional indicative takeover offer from Wesfarmers. The indicative price of $1.38 cash per share represents a premium of 20.5% to API's closing share price on Friday. The offer values API at $680 million. Wesfarmers informed API that it has entered into an agreement with API's shareholder, Washington H. Soul Pattinson and Company, which holds a 19.3% interest in API. In a separate update, API will cease making personal care and over-the-counter products in New Zealand and outsource their manufacture in a bid to focus more on its consumer brands. The company has also been forced to downgrade its earnings due to lockdowns. API now expects full-year underlying EBIT will be around $66 million to $68 million, and its reported EBIT to be in the range of $31 million to $33 million. Moving on to the next stock making headlines now. Australia's leading civil and mining contractors, NRW Holdings shares, are trading up after selling mining assets to Boggabri Coal. They will sell a number of its major mobile mining assets to Idemitsu Group's Boggabri coal operations after it exercised an option to acquire the majority of the major mining equipment of Golding contractors. The agreement will see the sale of 38 major mobile mining assets from Golding to BCO with a target completion date of the end of July. Next newsmaker under the radar today is healthcare company Healius. Their shares soared after rebranding their imaging division and acquiring Access Diagnostics. Now, Access is a Queensland-based imaging business with earnings of approximately $2 million, consisting of 3 radiology practices located in growth areas near Brisbane and 1 practice in the Whitsundays. Access will become part of the rebranding Imaging division, now named Lumus Imaging. The rebranding will begin with 7 sites across New South Wales and the ACT, transitioning to Lumus Imaging in August. The remaining sites across the country are expected to be completed over the next 18 months. Moving on to the next stock under the spotlight now, Australian biotech Medlab Clinical saw their shares soar after obtaining human ethics approval for Australian sites for the Nanobis cancer bone pain Phase 3 trial. Nanobis is Medlab's most advanced non-opioid pain medication, utilising Medlab's patented delivery platform NanoCell. It's time for another short break, but stay tuned as I'll be back with sectoral updates from the Australian share market. And welcome back. This is Rachel, your host, live from 𝐊𝐚𝐥𝐤𝐢𝐧𝐞 Studio, and you're watching The Opening Bell. Moving on, let us glance through the ASX sectorial charter now. The Australian technology shares remain under the investor scanner amid the ongoing Chinese tech rout. After Thursday's sell-off in IT shares, the closing of the last week had seen a sharp recovery, with Nasdaq 100 recovering closer towards record highs. Meanwhile, Australian energy majors such as Beach Energy, Origin Energy and Oil Search are currently trading in the green zone amid further oil price uptick. On Friday, crude oil prices ticked up for a second consecutive day as commodity traders increased their positions, reacting to the falling US inventories. The signs of strong Asian demand from both India and China added the support. Brent crude oil futures were up 1.93% to $75.55 a barrel, while US West Texas Intermediate futures were up 2.2% to $74.56 a barrel. Let us move on to the miners space now. Heavyweight miners BHP, Rio Tinto and the Fortescue Metals Group are all trading higher so far. On Friday, the benchmark iron ore futures in China traded lower and logged their fourth consecutive weekly fall as concerns over steel output controls suppressed demand for the steel-making ingredients. The most actively traded iron ore futures contract for the September month delivery on the Dalian Commodity Exchange closed 3.7% down on Friday at 1,163 yuan per tonne. It was down 1.6% for the week. Meanwhile, nickel prices hit their highest levels in 4 months on Friday on the back of strong seasonal demand. Copper and other industrial metals also gained on the last day of the week after the highest commodities consumer China announced that it would reduce the amount of cash holdings with the banks as reserves to boost their economic recovery. On that note, ASX-listed copper players Oz Minerals and Samphire Resources traded in green territory during early trade this morning. In the yellow metal space, Newcrest Mining, Evolution Mining, Ramelius Resources and Gold Road Resources dipped amid a gold price uptick. On Friday, gold prices inched up towards their best week in 7, underpinned by a weaker US dollar and concerns over the outbreak of the Delta variant of the coronavirus, which could hamper the global economic recovery. Well, that's all from me for now. I'm Rachel signing off. We'll be back with more stock updates in our upcoming shows during the day. Stay tuned to 𝐊𝐚𝐥𝐤𝐧𝐞 TV for more live updates across the economy, markets and sectors.